the currency space, where the rupee shut shop at 54.28, gaining for the second straight day today. The gains came from higher dollar inflows due to a share sale and sale and the debt limit auctions to foreigners. But dealers expect the rupee to remain under pressure due to continued political deadlock in New Delhi. Let's get in then. Satyajit Kanjilal, he is CEO of ForexServe, and he joins us live for the show as well. Mr. Kanjilal, hi, welcome to the show. This week really has been news-making. The latest, of course, coming in sense of the sales and the dollar inflows into the market, which have helped the rupee today. But do you see it sustaining?
Yes, Manisha, I do think that what the market is doing over the last several days, in fact, a week or more, is that they're selling dollars at key resistances, which is just above 54.50, and sustained sell has helped the rupee to hold its ground and below 54 for a while. But I think, as I mentioned earlier in several of the commentaries that we've engaged in, is that the rupee is not going anywhere. It is going to be in a very tight range for a very long time, and I don't think there will be a runaway move at all.
Vijay, what's your sense coming in for the Indian rupee? Now, very, very ranged, while we have seen that 3-week high of 53.90 in this week itself. But do you see the rupee going there before this week ends?
Manisha, it would be possible if the stock market was to basically show signs of exuberance, if you have some positive triggers coming in, which I think are likely to be absent. On the other hand, you have the fiscal year end approaching, and you'd have oil marketing companies needing to pay for their imports of crude oil, which will act as a pressure point on the rupee. And I do agree with what you opened this segment with, that the general consensus, which I'm with, is that the rupee is likely to remain under pressure. I am long dollars and short rupee, and I would maintain that trade in the absolute near term.
Mr. Kanjilal, two important factors that the markets are working with right now. There's a condition in Cyprus which is still out in open, uncertain. Same is the case with New Delhi as well. How are you looking at these factors?
We'll take one at a time. So if you take Cyprus, I think it's a non-event. I mean, it's basically the contagion effect that people are worried about, reading too much into it, in a sense that, the conditionality was considered to be something which could be seen as a precursor to similar things happening in the rest of Europe. And it's a contagion effect we've seen in the past happening because, like a domino effect. So that's what people were reading into. But then at every passing day, there seems to be a reason for doubting that. And therefore, the euro is again started picking up from the 128.80 support towards higher levels. So therefore, the base is being made here, I think, for the euro to move somewhat higher. I think the drop that we've seen from 137 to at this level 28 is about what the market can do at this point of time. So overall, we feel that the Cyprus issue will get taken care of. Bigger issues have got taken care of: Italy, Greece, Spain, what have you, and they've all survived. So I think Cyprus is not going to be a major event. On the other hand, as far as India is concerned, again, I think this is sort of a red herring, and I think it will get taken care of. The seats are enough for the Congress to go ahead with the coalition, and I think there will be clear evidence that this is a storm in a teacup and not a storm on the high sea.
All right. Vijay, what's your sense coming in for the global currencies then? Euro 1.29 or thereabouts. Where do you see that headed?
Manisha, in case it has to decline, there's ample support at the 1.2775 to 1.2825 levels. On the upsides, I think 1.3075 to 1.3125 is where it'll be range bound with. Where the US dollar index is concerned, 82.40 is a level I would watch out for as a support in case it's to decline, give or take 5 basis points here and there. On the upsides, I don't see it in the coming 1 or 2 trading sessions at max going above the 83.20 levels.
Mr. Kanjilal, one important factor, of course, would be the March ending, and you might see some demand for dollars coming in during that time. So with just 1 fortnight or less than that to go for, what's your range for the rupee for the rest of March?
Yes, I feel that that factor is something that will be a game spoiler for the rupee in this period. So I would say that 54, 60, 70, 80 maybe would be the low for the rupee, whereas maybe 55 at the worst case scenario. But on the other hand, since if the euro were to go much higher from here, beyond 131, then I guess the rupee can be steady close to 54. So 53.70 to 54.70 would be the wide range going into the end of the month.
30 seconds, Vijay. Same question to you. Rest of March rupee range.
I would think rupee can sink to 55.5. I'm talking about the currency futures in the currency derivative segment, and appreciation wise 53.75.